I mean, just I wanted to stop on the NFT part because, like, everyone we've had on the podcast, everyone just doesn't like NFTs, or at least just goes
Yeah, so,
just says it.
NFT collectors might be a good option for a certain collectible or a protocol that does tokenized Pokemon cards, for instance.
Yeah,
But yeah, no, they wouldn't necessarily be the best fit for the Delta Neutral.
yeah. Hello,
Hello.
how are you doing?
Good.
Thank you.
Thank you.
No, thank you.
No, thank you.
Perfect. Okay, today we're gonna have with us Matty from Legion.
Yes. Legion.
A more serious episode because I mean most fucking degens don't know what ICOs, IPOs, pre-sales. No one even do you know that most of the people that I have on my Twitter don't know what the ICO era was. That's how uneducated they are. I love you guys, but do your research, man. I mean, go and search up ICO era.
Like, I'm excited because also these are one of the very few companies that are compliant. Like, if you think about the companies that we've had, like, I don't want to say like anything bad about it or anything, but like they're not compliant. Like, I'm just being truthfully and brutally honest. So like I have huge respect for these.
We hate compliance.
I have huge respect for these guys for actually being compliant
Yeah.
so early and like taking that aspect of crypto seriously, because we're doomed in case you haven't noticed, because the future will be very dystopian.
Oh, we are so fucked. I mean, I'm still bullish. I think we still have a chance, and I think even people in power that dictate these policies and these laws and these frameworks, I think even there they can find some resistance in terms of the whole oversight that they're trying to do with every single transaction. Fuck. But yeah, I really wouldn't want to waste much more time and just go and invite Matty and get in the call and see what he has to say about these whole things. I mean, I hope we're not in a bear market, man, because we're fucked. Hello, Matty. Thank you for joining us today. So before we get into like everything crypto and Legion and everything else, basically, I really, I mean, this is more of a personal thing because I really want to know how people got and founders got into crypto. What they did before crypto, because most of the people that I know, they come from a traditional background, and then they join crypto because they either like the technology or they just see it as an opportunity. So, what was the story for you? Like, what's your origin story?
Yeah, good question. I mean, in my case, my origin story was I really started getting interested in crypto in the 2017 ICO craze, right? Just this idea. I mean, obviously, that you could make some money doing it, and then also that these companies or these projects could be formed and literally have hundreds of millions of dollars contributed permissionlessly by people around the globe overnight was pretty hard not to pay attention to, right? It was this just crazy development. And so that was kind of the thing that opened my eyes. I mean, I'd heard about Bitcoin before, written about Bitcoin as early as 2016, and started, dabbling in it. But I think crypto, the 2017 ICO craze really opened my eyes to it. And my personal background before that, I came from, traditional finance world, machine learning, data scientist, engineer. So that was what ultimately the lens I kind of broke into crypto from was parameter optimization, token design, like modeling out these new economic structures and kind of stress testing them. And so that was what I found so fascinating about crypto is you can build these, permissionless, autonomous systems that need, algorithmic kind of like control or optimization over time. So, yeah.
Yeah, and like I haven't been around in 2017, during the ICO boom.
Yep.
And so I just wanted to know, like, what inspired you to start, building Legion? And is it like, did nostalgia maybe play a bit of a role in terms of that?
Definitely, I think nostalgia played a role. Also, just seeing, as I mentioned, I've worked as a token designer, a parameter optimization type of roles for a number of projects, for multiple kind of billion-dollar protocols, including Stacks, the Bitcoin L2, status, the SNT token, one of the actual first and earliest ICOs in Ethereum. And so just worked with a bunch of founders, have seen a bunch of tokens launch, and kept seeing founders make the same kind of mistakes over and over again when it came to token distribution. Now, I also have a background in data science, as I mentioned. And so I remembered, in Web 2 data science, and we spend so much time and effort understanding what each and every one of our customers is going to do next, right? And like modeling out their value as a customer and matching that up accordingly with the kind of advertising spend we spend on them. And then in Web3, teams were handing out, tens of millions of dollars of incentives and just kind of hoping for the best, right? And so for me, it was like, okay, how do we get away from this paradigm we've fallen into of only VCs getting access and then airdrop, farmers and Sybils getting the rest? How do we go to a more incentive aligned, more data driven type of distribution where real human beings, real end users, real people who want to own the network can get access rather than just, the bots or the VCs? And so that's why Legion kind of started the way it did, focusing on token sales, focusing on our reputation system, Legion score, merit-based allocation, as we call it. And so that's, that led me to Legion. Yeah.
I mean, you mentioned bots, you mentioned VCs. Personally, I think VCs are a major player in why, like, token launches in 2024 and 2025 have been quite catastrophic for many projects. Yep. Because, and bots as well, of course, because you have VCs and bots. That's everyone else is basically alienated from the initial launch of a coin, right? They either get farmed through social fi, this meta, this own the network because you tweet about it. Like, nah, come on.
Yeah.
I like the concept. It sounds really nice, but I think it's not done properly, right? So
yeah, I mean, to be fair, it's hard to do, but I think we all can can relate and see how our timelines have just turned into slop. Like it's kind of depressing.
Yeah, before this recent update Twitter got, everything on my timeline was like terrible, like horrendous. Like when I went enter Twitter, I wanted to go back to like Instagram and LinkedIn. Imagine crypto Twitter used to be crypto Twitter used to be really interesting, right? I enjoyed my time there. Like back in 2024, it was really nice, and then it just started going
takes with some really interesting insights from people, and then more recently it's just been slop shills that are obviously written by AIs. Yeah, it's depressing.
And the M dashes are like they kill me.
Yeah.
But what do you think about like social fi in general, like the concept, and not just the concept? I mean, the concept, the people that engage in it, because you have also big influencers in crypto, big KOLs that take part in these things, but they do a good job. Some of them do a good job. They provide really good value and really good content. Some are making even video content in this way, and they're farming quite a lot of tokens, which is nice because I learn about the project in a professional manner, basically. But I mean, what do you think about it? Do you think it has a future in this industry, since we're talking about it?
Yeah, it's a good question. I mean, I think it definitely does. I think like most things when it comes, or all things when it comes to crypto, you have to think about the incentives, right? The incentives that design the behavior or influence the behavior. And so if you are incentivizing just like quantity of output, even if you don't say you are, but the algorithm kind of, in effect is, then that's what you're going to get. Just like we had, this might predate you guys, but Steam It was like a blog post project in 2017, 2018. And they had this, token mechanism where the more people that kind of upvote your post, the more tokens you get emitted. So in theory, it rewards quality of post. But in practice, of course, people just posting as many posts as possible, spinning up accounts, upvoting their own posts. So you got in practice, you got quantity of spam, right? And so I think we're seeing a similar thing with InfoFi, where part of the problem is the implementation. I don't think it's necessarily problematic from a conceptual point of view, but like with the points program, the more specific you make it, the more automated you make it. Yes, you more scalable you make it, but you make it more exploitable, right? And so I think InfoFi done really well will look like points programs done really well, where it's a bit more, not all the details of how everything works is disclosed. It's a bit more manual. Like maybe it's more about the founders, like manually going and seeing like, wow, this post actually obviously took some time to understand and research our product and like had a fresh take on this, like manually upvote that post, right? So I think done really well. InfoFi should use AI to surface suggested posts to humans from the team who are then reviewing and like assigning, boosts or points or whatever it is to the post, rather than an AI doing everything, because then you're just kind of like ultimately going to be rewarding spam. So I think there's room for it. And I think also part of it is, again, the incentives at play. If you're giving free tokens out for this, that's very different than if InfoFi qualifies you to participate in a sale. So for instance, we did something with Cookie with the Almanac sale where users could qualify for a discounted tier, not free tokens, but a discounted tier based on their snaps, based on talking about the project, and based on putting their money where their mouth is by depositing TVL. And so I love that blend of like, it's not enough to just, yap and yap and yap and yap. You gotta actually have an action that backs it up. And you can then, buy in and get favorable terms, but you're putting skin in the game. You're not just getting something with zero cost basis, because we know time and time again, there's a very psychological difference between getting something for zero cost basis and something you're paying for at the end of the day. So answered a few questions there, I guess, but that's also why I'm bullish token sales over airdrops in general.
Yeah, well, let me just say, like, right off the bat, that you actually are one of the first, like, projects, if I may, that are Mika compliant and part of this podcast. So
Nice.
hats off
Right,
to you
cool.
guys, for actually taking the regulation aspect, very seriously. I mean, we've had exchanges join us in episodes, and they are not even like Mika compliant, or like they barely have any licenses to operate globally, and they do operate globally, which is ironic. So I really like the fact, like, you guys, for example, the Bitpanda guys, the exchange, they took, for example, compliance first, and they focused on compliance first before they started to expand. And I kind of see like you guys have had a similar approach in terms of that. But like, how do we convince people that doing the KYC is actually the normal thing to do? Because someone who is a DGen and you ask that person to verify his profile or her profile, they might be more reluctant to participate in the ecosystem. So how do we educate them in terms of actually having them internalize the fact that they need to be, you need to show that you don't have malicious intents and stuff like that. So I just think it's like a big curve to climb in terms of educating people on that front. But like, I want to hear your take on this as well.
Yeah, I appreciate the question. I mean, I think this might be surprising to people hearing it from me, but yeah, we do focus on regulatory compliance, but I still don't like KYC personally, right? Like, I think it's a bad implementation of what people are trying to do. And so when it comes to KYC, we view it as kind of like a necessity to follow the rules, and we think that being compliant is required in order to bring the best quality projects to retail people, right? Because if you put yourself in the shoes of like a major, tier 1, tier S, like absolute top tier project, your lawyers are going to be telling you, why the hell are you selling tokens to people who you don't know who they are? You're raising funds from people you don't know who they are. You could be triggering all sorts of like anti-money laundering. You could be creating all sorts of headache and problems for yourselves, opening up yourselves to risks. You're going to just rather raise funds only from VCs or or go a regulated route. And so that's why we've done it this way. We don't have the opinion of like, everyone should just be regulatory compliant for its own sake, but we see it as a benefit to the business, to our users, to get the best quality projects. And then in terms of KYC specifically, I hope and believe that the rules will eventually change, where we can use more like ZK, technology, because it does create honeypots. It doesn't really, you could buy like fake KYC documents, a fake Coinbase account, right, on like Telegram groups, for instance, all over the place. So it's not effective at what it's trying to do, and it's also not really, that helpful for, like, if anything, it just creates more risk for users, as we've seen, because your data can leak. And so We take it very seriously. We have user, data very secure in a separate environment for the rest of our stuff. But that's why we also lean into reputation and Legion score, because those aspects really govern, like, okay, is this person likely to be a unique individual person, and what have they done? And so I think it's kind of like a necessary aspect to get access to the best projects, especially as traditional finance itself moves more on chain and more tokens are effectively tokenized RWAs, right? Tokenized equity, like, et cetera. Like, you're not realistically going to be able to get access to those and those higher quality, more revenue generating opportunities if you're always just blanket excluding all kind of, KYC approaches.
So like now, before we get like into the risk scoring aspect and all of that,
Sure.
I want to know a little bit, coming as someone who potentially will have a startup in the future, let's say, and I want to collaborate with you guys and, have my on-chain IPO via Legion in this case. And from what I saw, like in terms of the Mika aspect, it's about like a specific kind of token and not like EMTs. Could you just like walk me through that, because like
Sure.
I'm really curious to know.
Yeah. So under Mika, there's the Mika, by the way, for people who are not familiar maybe with even the terminology, it stands for Markets in Crypto Assets. It's regulation in the EU that for the first time in a major jurisdiction basically established, across the whole EU, there are these things called crypto assets. They are not, i.e. tokens, right? They are not always the same thing as securities. And therefore, this is the set of rules for crypto assets, explicitly saying that they're a different thing than securities, which the US still hasn't done, right? So Europe actually beat the US on this by a few years. And so what Mika has a taxonomy where it says there's largely 3 types of tokens. One is e-money tokens, effectively stable coins, right? 2 is asset referenced tokens, which are very similar to stablecoins in that they're a token that kind of tracks another asset. So tokenized real estate, or, some tokenized basket or index that tracks this other thing, right? It's an asset referenced token. So those 2 are kind of similar. The third bucket is what you might call utility tokens or gas assets. Like, it's basically under Mika, they call it literally like, other tokens. So it's kind of like the other bucket that catches all for like native gas assets, utility tokens, etc. And that's mainly where we operate, because e-money tokens, stablecoins, has a lot more rules to follow under Mika, and we're also not, you're not buying stablecoins in an ICO. Asset reference tokens, we're working with some regulators, maybe some sandboxes to support some different types of asset reference tokens in the future, but it's been kind of difficult to do that in practice for many teams, because the regulators just aren't as warm to those. They can more easily be interpreted as securities rather than pure crypto assets. And then the third bucket is mainly where we operate. Again, like gas asset tokens, utility tokens, etc. More of what like most DeFi people are used to.
So I know earlier you said that, you don't like KYC, but you gotta do it because that's like how things should go, especially with IPOs and everything. I do agree, and I know you mentioned ZK technology.
Yeah.
So what I want to know, because I think ZK technology is probably one of the, let's say, I'm not gonna say foundations, but I think I can use the word pillars that can take crypto to the next level. Because as things are standing right now, it's getting quite dystopian, right? There are new laws being proposed where every transaction made on the blockchain should be reported to the authorities, and that's not even banks do that, right? Even in banks you have privacy, and crypto was like created to be trackable and traceable and transparent and everything, but not go against the whole not like this, and not go against the very values of privacy, right? So when do you think this could materialize, the whole ZK technology thing and privacy, like by default blockchains become the new trend or the normal in crypto?
So we already have, commercially it's already viable, right? So if you didn't care about regulatory compliance purposes and you only cared about, Sybil resistance as one example, you can already use ZK technology so someone could be connecting various different like external accounts and, test like, yes, I am, from America. Yes, I went to this school. Yes, here's my credit score, all without sharing, right, the actual underlying information. And of course, that can roll up into, okay, like this person has proven so much about themselves that they're very unlikely to be a Sybil, right? Because getting like that level of credit score and education and everything for like 1,000 different accounts is just not feasible, right? So for commercial purposes and for like certain use cases, ZK, the tech is already here. The real issue is that on the regulatory side, for meeting requirements like KYC, like anti-money laundering, international rules, which by the way are not just civil penalties, like you can go to prison for violating these things, right? The rules there are still that you or the entity that's ultimately responsible has to be able to, if the regulator comes and says, show me details about this transaction or this person, has to be able to surface the actual underlying information about that person, right? And this is similar to a bank, similar to your stockbroker, right? Like similar to all that they all have, when you sign up, you complete a form, you show proof of identification. That's why, because if you're laundering money or like involved in like financing terrorism, for instance, the regulator expects to be able to see the actual information underlying, not just a ZK proof. They're like, oh, he's not a he's proven that he's a U.S. citizen, for instance. Like that's not good enough under the current regulations.
So now, like, since you mentioned like the scoring system, so now I have a question. So like when I thought first about having like this scoring system, I had like this inclination to think that this is some sort of a totalitarian, thing to do. But like when you think about it, banks use a credit score. So like I really like the fact that you've kind of really embedded the concept of meritocracy in what you guys are building, and I think that's actually the fairest thing to do, especially in an industry that's still considered to be the Wild West of finance. But like I saw that you're going to be speaking in Breakpoint this year, right? And so like the Solana people are all degens, and like there's this constant feeling that crypto today is it's like a casino, or whatever we call it. At the end of the day, it feels and looks and behaves like a casino in many aspects. But like when I look then at what you guys have built, you have like you require from the users to be much more methodical, much more systematic, and do their due diligence and plan what they're going to do beforehand. So, but now given that we're living in this brain rotted and degen era, especially within the Solana chain, how do we convince people that how do we make sure people get back to actually doing research before they invest?
No, it makes sense. A good question. I mean, I think it's a dichotomy that you have not just in Solana, but also with crypto itself, right? You have like both ends of the curve. You have the stupidest, most degen stuff in the world happening with crypto. And then you have some of the most sophisticated, most advanced, cryptography and privacy and mathematics and all crazy sorts of stuff happening in crypto at the same time, right? The same industry with both extremes. And I think Solana exhibits that same characteristic. Maybe it's just more obvious to see it. But, you've got your meme coins and your casino, and you've also got projects like 00, laying down physical infrastructure and all sorts of projects that are cutting the edge. I mean, one example of that is, Solana in general really setting itself up to be the infrastructure for tokenized equity, right? For a lot of TradFi rails to move onto Solana. Of course, Ethereum might say the same thing, right? Like I think both are positioning themselves in their different ways, and we'll see kind of how it plays out. But they're definitely both leading that space and playing to those narratives. And so I think thinking about Legion long term and our industry long term, we've started with crypto native assets, right? All started with Bitcoin, of course, which really provides a necessary substrate of there is for the first time a digital asset that is not controlled by a government or one particular entity. that has an inherent value. And if you can make that assumption, if you can assume that we start with that prerequisite of this digital asset that's freely divisibly traded, right, can go around, can't be censored, can't be shut down, that has value, all sorts of stuff can be built and extend from there. So for me, it all goes back to Bitcoin. But now that we've gotten to these systems that have, the infrastructure and the rails to be able to support the abstract concept of information and value being exchanging hands in permissionless ways, at the speed of light, now this is the perfect use case for TradFi to move over. And so I think in the future, we've started with native crypto assets, utility tokens, gas assets, etc. But in the future, it'll be tokenized assets of anything, right? So tokenized real estate, tokenized equity, tokenized shares of Mr. Beast's cash flow in the future, right? So that's kind of the world that Legion is building for. We call it ICOs now, but in the future, it'll be a stock market IPO, and an ICO will basically be the same thing. We might not even have different terms for them. Because IPOs are becoming, more on-chain, and ICOs are becoming more regulated, standardized disclosures. So yeah, that's kind of how I see it playing out. Where yes, you'll still have the degen kind of like DeFi, cypherpunk type of vibe always, but there will be a growing part of the market that is the big financial market, just moving its tech infrastructure and the kind of the ecosystems it plays in.
I mean, I've never been more excited about crypto since when I joined crypto back in 2021. Like, I think currently everything's just going too fast for it. I don't know. I don't know, mind blown. I can't even keep up. But like, I want to go back to Legion now. Just a really generic question. What makes Legion better than competitors? Like, why should I, as a user, choose Legion?
Yep. Yeah, so I guess there's two different ways to answer that, from the perspective of a user, an investor, and the perspective of a project. Maybe I'll answer the project first. So from the perspective of a project, we have a couple different advantages. One of them, again, is that regulatory compliant focus, so that you could work with us and not have to worry about the funds getting frozen, or your door getting knocked down in the middle of the night. And then also that's this merit-based allocation system we've been talking about. This is by far the favorite feature of every founder we work with, where they can see exactly the type of user that this person is, what have they done on chain, what have they contributed to as a developer, right? Who's in their ecosystem, whose ear do they have, all the social analytics data as well. And so if they wanted to, they could literally go one by one through the hundreds or thousands of people who've applied to participate in their sale and hand select the right people for their community. So that's a super powerful feature that virtually every founder we work with just loves and you can't find elsewhere. And the third thing is mass distribution. So you might have seen our recent partnership announcement with Kraken, with a few other exchanges, partnerships in the works will be rolling out soon, where we as Legion kind of play this underwriter role, helping you as a project find the right retail buyers, but also get listed on the right exchanges, get the right terms from market makers, get in front of the liquid funds that will be buyers post TGE. And so we're playing this, this underwriter role, doing everything that an IPO underwriter would do, other than, taking on the risk, the pricing risk. That'll, I'm sure the model will evolve in the future, but doing all the services that an IPO underwriter does in the context of an ICO. And then, of course, circling back to an end user who's looking at these platforms and wants to know, why to participate on Legion, it all comes down to the quality of the projects, right? Because we've positioned this way, because we have the value offerings of merit-based, regulatory compliance, and mass distribution and partnerships there, the best projects can come to Legion. You get early access to those projects. You get merit-based access to those projects. So even if you're not the richest person out there, but you've been hustling, you've been grinding, right, you can get access. So it all comes down to that, and the community of like building up your score, working with other people, in the community to continue to track your score and improve it over time, and just learn more about ways to make money. There's been many different perks to people having a Legion score, whether that's participating in very exclusive airdrops, where your Legion score qualifies you, or participating in sales, right? Like, again, to circle back to the main point, the biggest impact is the quality of the sales you're getting access to. Yield basis, for instance, being our latest big sale, Michael from Curve, his new project, that was an obvious one, and that people were sad to miss out on, but that does happen when a sale is 100x subscribed. But everyone who got in was very, very happy, and you could only do that on Legion.
First of all, thanks for answering from both the business perspective and also from the user perspective. So because of that, now I have two questions.
Okay.
And the first one is, from the user perspective. So these sub scores of the scoring system, which are cloud, development, chain, interaction, and endorsement. If I mess up, let's say, if I dump on my very first participation and I have like a very low score, can I like redeem myself in the future? Like, is the process more difficult for me to redeem myself? And like, do all of these sub scores have the same weight, like 20% weight, or are there like some of them have more prioritization in terms of, the scoring system?
Yeah, so that's a really good question about how Legion Score works and the subcomponents. It's something we've spent a lot of time on, designing and co-designing with our users. We do have an overall score called Legion Score that obviously combines all those subcomponents. It does weight, certain ones that are more Sybil resistant, higher than others. But the important point is that every project cares about different things and can choose different criteria. And so no project is just going in there and saying, okay, rank everybody by Legion Score, those people get allocation, right? Otherwise, it would just be the same people getting allocation every time. And so different projects, like some projects care most about developers at their stage. Some projects care most about people who provide TVL in the Solana ecosystem, right? Some care about people who have a big social following in Ethereum. And so projects can choose their criteria ahead of time of the sale, and really they have the full customization ability of who's getting in, who's getting what, allocations. And so it's less about Legion saying, this is how all these things combine into one score, and you have to pick people based on that one score, and more about Legion is giving all this information to teams and making it easy for them to sort through the noise and find the best value add investors for their project, which is going to be different from project to project based on what you're building and the type of people that are applying. And so in the specific example you mentioned, where someone participates in one sale, immediately dumps the tokens, like, yes, that is something people, projects would be able to see in future sales. Like, okay, this person might be good, but they sell all the tokens that we sell them immediately, so maybe we'll give them a smaller allocation, or maybe we'll skip them this time. And so it'll be up to you to kind of continue to get allocation by increasing your scores in other ways, or not dumping some of the tokens you get, reacquiring some tokens to improve your score. But that's the beauty of it, right? Is everyone is accountable. There's no there's no hidden bias. Everyone's on the same level playing field. The same scoring system is being applied to everyone. And even if you've never interacted with someone, even if you're not, rich enough to be an accredited investor yourself, even if you didn't go to some fancy school, you can still get access if maybe you've been hustling and contributing code, or been grinding all these years on crypto Twitter, whatever that is. Yeah.
You practically also answered my second question, which was from the business perspective, because I was going to ask, like, do these projects have like a say in terms of which of the subscores matters, or what kind of user behavior matters more? But like, now, can you like just walk me through like the process? If I'm someone who has a business that wants to have an on-chain IPO via Legion, could you like walk me through the process, besides because I'm assuming you would require like a lot of legal documentation and stuff like that, which makes sense, but like, what other things do I need to know, like, or for other businesses that might be viewing, for example, this episode, and what do they need to know in general?
Yeah, good question. So I mean, yes, from a project's point of view, we're meeting with them. We are by design not a permissionless system, so we do like to look at the project, meet the team, understand what they're building. If both parties want to work together, yeah, there is some boring stuff to knock out, KYB, sign a services agreement. But then we're really getting into the meat and potatoes of like planning the sale, right? Like, what exact sale mechanism makes sense for their objectives? When is the date? Are they going to be doing are they a fit for any of our partners, our distribution partners, like Kraken, for instance, to co-host the sale, so they get even bigger reach? And then once we've started planning that, it's starting to market the sale and get people aware of it. And then the sale goes live. Users can participate if it's a partnership sale. They can participate on Kraken's front end, for instance, if they already have a Kraken account, or right on Legion directly on chain for on chain users. Both kind of pools add up to the same pool. Users are contributing funds. There's a period at which the fund, the deposit period ends. Projects are then reviewing all the applications and assigning allocation. And then everyone's been granted allocation. People who didn't get fully approved can withdraw any, or refund any unfilled portion. And then the project, when TGE happens, is depositing the tokens they've sold to that same smart contract so that users who bought them can withdraw, claim their tokens according to any vesting logic that was associated. So it pretty much all happens on chain. It's like a very, organic, native kind of experience for projects once you get into it. But yeah, there's some like more, household or some more chores stuff up front of signing contracts and this sort of stuff.
I was gonna dive into like the UX of everything, but you just mentioned that for people who are more like normies, they can use the Kraken's like front. So
yeah, well, I mean, not every sale is hosted on Kraken. Like where there are pre-token sales and early kind of startup sales where people get access to early stage, higher opportunity things. But not everyone's on Kraken, but big sales will be on Kraken. And then we at Legion, I don't know if you guys have used the platform, but we started definitely very crypto native, and we need to smoothen the UX a bit for normies. But our core focus was and is at the moment at least on chain, natively on chain activity. But yeah, I'm curious to hear your thoughts if you guys have tried it out.
Yeah, so personally, I think if you start like natively on Web3, that's how you gotta keep your core, right?
Yeah.
But as we want to have this mass adoption and we want people to participate even in crypto IPOs and pre-sales, ICOs, everything like as insiders, and get these gains, I think we should like try and, as an industry, I'm not talking about Legion specifically because I'm still just talking in general. Mm-hmm. I think we should just try and aim for as much account abstraction as possible, as simple as it gets, right? But I don't know how hard that would be for a platform like Legion to do, because it's literally the most, I'm gonna say this because I that's how I see it. I don't like numbers that much.
Okay.
It's probably one of the most complicated sectors of crypto is taking part in such sales, right?
Yeah.
And even using decentralized exchanges nowadays, that's just trading in Web3.
Yeah,
I understand how to do it because I've been here 5 years, right? And I've been a daily user. But for a friend who just joined, let's say, they're gonna get lost. So,
100%. Yeah, I mean that's always been crypto's biggest challenge to mass adoption, right? Is like the unfriendliness of the user experience, especially with the fact like if you do the wrong thing with a little string of text, there goes your whole life savings, right? So it's pretty crazy when you think about it. I do think, this is not really specific to Legion, but I do think that overall we need to see, for true mass adoption of kind of on-chain technology, more like MPC network kind of systems, like Lit, for instance, where your keys are being managed in a secure way because it's decentralized and no one is able to reconstruct the key by themselves. And they combine a lot of like physical security in the real world with kind of software security to do that. It's not just relying on like TEs, for instance. And whether it's Lit or not, I'm saying these type of like social recovery platforms, I think, are a necessary component to going mainstream. And so I do think there's a way, like we currently use Dynamic, for instance, for embedded wallets. But maybe there's a way in the future we could use even more kind of, more powerful solutions where you as an end user don't even necessarily know that it's crypto, and you don't have to worry about your private key. You just log in with familiar information to you. You send fiat, it's automatically on-ramped behind the scenes. You get fiat back, it's automatically off-ramped, right? So I don't know. It's a lot of things that everybody in the industry is struggling with at the moment. Building that out and figuring out the best way to bring this to normies.
Yeah, I think like in terms of institutions and governments, I think we've established that they wanna be part of the journey, right, of crypto and of the whole industry. But Yeah, I think currently most of the big projects that are working in different sectors in crypto, they will be the base foundation upon which everything will be built on. And
Yeah.
that's because I don't think like in a decade or let's say 15 years, people can continue to onboard new let's say normies. Yeah, let's say normies. It's hard to onboard them in 15 years time when we still have the same UX, right? So I think everything will just be built. Let's say Legion, right? Everything will be built on top of Legion. They will use the Legion will be, let's say, the on the back end of every single IPO, ICO, pre-sale that happens in crypto. I'm just assuming. I hope that happens.
Yep, definitely.
And then different projects built on top of that. I want to take as an example Polymarket. So they have a good interface, but there's like 10 or 20 different apps building on top of them, right? They get the data from them, they get the technology from them, and they just build a new interface, if you know what I mean. So
it makes total sense.
I'm not a technical person, by the way, so I'm just seeing this as a normal user. I'm trying to think as a normie, right?
Yeah.
A normie that understands how things are going to a certain degree. So,
I mean, I think you're 100% on track. Like, Uniswap, for instance, right? They have the protocol. They have their own front end, but anyone can build a front end. And you could definitely imagine, people building like normie friendly front ends of just like, giving people two options. You have this, you have USD, you want Bitcoin or you want Ethereum, select, swap. They don't even know they're using Uniswap under the hood, right?
Now, like, I saw that you also wrote like a book on token design.
Yes.
Tokenomics for builders. Now,
that's right.
I would be lying if I said that I read it, but I did like skim through it, and I saw the good, the bad, and the aligned in terms of what's a good tokenomics and what's not. But like, could you walk me a little bit through the book, and after that, like, have you found like one principle from the book that you had to break when you started Legion because the real markets maybe don't cooperate with theory in a way?
Yeah, that's a really good question. I appreciate it. Yeah. So some context in the book. I did write the book having worked in the industry, having worked with a bunch of founders before, designing their tokens, seeing their launches. So it's not all just coming from theory. It's coming from a lot of like painfully learned mistakes along the way. But the book is largely broken into two sections. The first section is more describing like background information. We go through a whole like chronology of like from Bitcoin to now. And then the second section is more like a step-by-step guide for founders of like how to best design their token. And it's not shilling. It's for free. It's open source, right? Anyone can access it. It's a public good. It's been reviewed by people like Keone at Monad, Ilmoy, the founder of Tensor, Chris Berninsky at Placeholder, a few others. So it's gotten a pretty good reception from some serious founders. And so I would say overall, one of the biggest mistakes teams make is launching a token too soon, before they have any product market fit, before they really know what they're doing. Because once you have a token live, you almost have like two products. You have your actual product, then you have your token, and they're splitting up your time and your effort and your resources. So I think that principle has survived from what I've seen. I'm trying to think of a principle that sounds right in theory, but hasn't, always worked out in practice, or that I invalidated in my experience with Legion. And I guess it comes down to, as sad as it might sound, that fundamentals are not the only thing that matters. You can put in all the time and effort and design a really well-designed token, has beautiful mechanisms. The supply, charts look amazing. There isn't like spikes in inflation. There should be, in theory, a good balance of supply and demand. Everything is, all the variables are calibrated the right way, so it's not going to explode in any market conditions. But so much of this industry remains about optics, about narrative, about brand. And so I think founders, you need to design a token, but too many of them rely on a well-designed token to save a bad product, or like just get discovered on its own. And I think one principle that I've really seen a lot play out with Legion in particular is that even the best founders, even the best tokens, can still mess up the go-to-market steps. And so those are really important too. Beyond just designing your token, is working with the right market makers, signing the right terms with them, making sure that they're not ripping you off, getting the right listings on exchanges, all those sorts of things that also go into it, that probably most people aren't always thinking about. They're just thinking about buybacks and inflation and supply, but really all these other aspects matter as much, I would say. Yeah.
Yeah, and like I like this, and it makes sense because the token doesn't have to be like the end product. It shouldn't be the end product. It's just merely a tool to do something else, And
100%.
Artis always takes the example of like Polymarket and how it doesn't even have a token, but still onboards more users than a project that has a lot more brain maybe behind
doesn't
it. Like
have a token yet.
yeah. But like if you weren't building Legion and you had to design token from scratch today, like which vertical would you maybe avoid, and like or which one would you like prioritize?
I would definitely avoid gaming. I think gaming tokens are just dead. There would be one,
We are gamers, man.
I'm sorry to say it, but yeah, it's tough. It's tough out there for Web3 games, especially. I think you can have games that are cash flowing that have like revenue by it. Like if there's a strong actual tie of revenue to the token, that's one thing. But like in-game tokens, those are rough, especially play to earn type of dynamic. So I would personally avoid that at least. Sorry for your bags. But I think what's most interesting to me from a vertical, I mean, I think prediction markets are super fascinating. Like I was just thinking about this the other day of how some of the tooling, like Polymarket has built out that substrate, but some of the tooling in there features, like if you just wanted to like slowly, just a simple example, if you wanted to slowly acquire exposure to, like, I want to buy $10 a day of like Donald Trump winning the 2028 election, right? Like you can't do that in Polymarket right now. There's going to be a lot of apps, I'm sure, that come along and do that. Again, just one super simple example, but I think the vertical that is interesting to me is these end user apps that leverage existing distribution channels they have to then take the Polymarket infrastructure or prediction market infrastructure and bring that to Web 2 audiences. Like I think we're just starting to tap into the full set of users, and I hone in on this because sports betting is such a big market outside of crypto. And I think prediction markets are the way to kind of like the Trojan horse to get sports betting into crypto, again, even if they don't know that they're using it.
Yeah. So in terms of let's say consumer apps and onboarding and crypto, do you think that, like, I'm gonna say Polymarket, I think is the best example of a consumer app nowadays that's doing the onboarding? Because
I think so. I think you're right.
When I heard about Polymarket last year, I didn't know it was Web3. I literally I thought about it as an app that lets you bet on anything. And then this year, a few months ago, I was writing an article about Polygon and the ecosystem and everything, and I was like, wait, the names sound similar. So I was looking at some apps on Polygon, and then I saw that
there was Polymarket.
Yes, like the biggest. It's like crazy. But like,
Definitely.
do you think these kinds of let's say projects, I'm going to call them projects, have a need for a token? Because you said it yourself, like not every project needs a token, and if they already have a product, why have two products if you really don't need them? So two consumer apps need a token when you're targeting Web2 audiences that basically don't even care if you have a token; they just want a good product.
It's a really good question, because I think you do need a good product regardless of a token or not. Like having a token cannot save a bad product that no one wants to use. But if you have a product that people want to use, a token, when used wisely, can help accelerate it, right? So the analogy I like to use is that a token is not a match. It doesn't start the fire, but it's gasoline. It can accelerate the fire, right? And so in Polymarket's case, to put that into an example, they have all these incentives they're paying out, like liquidity rewards, right? All these sorts of things. They're spending all this money, they're spending all this cash, they're raising from VCs to kind of fund growth, fund users, fund trading volumes and liquidity. That is a perfect example of where a token could subsidize some of those effective costs. And so you could reward people with a token instead of cash, reserving your cash for kind of, growing other aspects or investing in other aspects of the business. Of course, that has to come full circle. Like there's got to be a strong value accrual driver for the token. I think one of the biggest mistakes in probably the cycle, not this current cycle, but the cycle before, is people just like said, oh, a token, helps us bootstrap liquidity, or it helps us get this, and it only thought about the supply side, right? You need to think about both the supply side and the demand side. So the supply side for Polymarket is really interesting because they can use that to reward certain behaviors and get users to do certain things like provide liquidity without needing to necessarily continue to raise, VC funding and dilute their equity. Now, obviously, the demand side has to come in where those tokens eventually need to have something similar to Hyperliquid, I would say, of protocol buybacks or rev share or some kind of very strong demand generator that balances that. But I think I'm super bullish Polymarket eventually having a token, and I think it will be it will be as popular as Hype is now, if not more.
Yeah, like I had one more question related to the risk. The scoring system. I know I keep going back to that, but like it just sounds fascinating to me. But like, are there like risks of bots maybe?
So I think that's important to keep in mind is in crypto, there's always Sybil, there's always bots, right? And so what the scoring does is it provides another layer of Sybil resistance, right? So if you have, let's say you have a good GitHub account that's contributed to, a lot of public repos that high profile people like Vitalik has worked on, right? Okay, great. Like that, you can buy that. Sure, you could fake that account, but combine that with also a Twitter that's up to date and has followers and like, okay, getting a bit harder. Combine that with wallets that have a long history of age and have been doing a lot of transactions and have consistently been using the chain. Like it just becomes increasingly harder and more expensive to do mass botting and Sybil attacks that you can do without this. And so you're never going to fully eliminate bots and Sybils. That's just a cold hard truth. But it's all just about making it a level playing field for real humans, real users to have access, and to make it less cost efficient for people to abuse the system, therefore giving more access to real people. That's what Legion Score is all about.
And like, if let's say, and I hope this doesn't happen, but like inevitably a project using Legion will maybe fail or like rug or implode, and like what would you guys like owe to investors at that point, like morally and like reputationally, or would it all like just boil down to what the company that actually did rug owes them? I don't know if that made sense.
Sorry, can you ask again in terms of the rugging part?
Yeah, so like if I have a project, I'm doing the on-chain IPO via Legion, and like after a while the project like just fails, like a Luna type of fail, like just something doesn't work out. Would like Legion owe investors anything at that point, like morally or reputationally?
Reputationally, yes. Like we do take it seriously to find the best opportunities, but of course, even the world's best investors don't have 100% hit rate. There will be projects, that are not successes. And so I think it just goes a lot to user education, right? Making sure that they understand the risks they're getting into, the right disclosures are being made, they're having all the information they would need to make an informed decision. And that's also another feature of Legion Score, really, is understanding, okay, like this is a crypto veteran, right? They know what they're doing. They use the type of protocols that this project is raising. They'd make a good fit for this project, right? Whereas someone who uses like someone NFT collector might not be the best fit for this new, super leveraged, delta neutral synthetic stablecoin, right? But someone who does a lot of that stuff would be a fit. And so it's all about making and matching the right investors with the right projects, which all goes to just reducing people's misalignment of expectations, because there's always a risk of losing your money. Really, the problem just happens when people, feel blindsided or don't realize what they're getting into. And so everything we do, from compliance to disclosures to Legion Score, aims at getting real people more access and helping them understand, the proportionate risks that they're taking on.
I mean, just I wanted to stop on the NFT part because, like, everyone we've had on the podcast, everyone just doesn't like NFTs, or at least just goes.
Yeah, well,
just says it.
NFT collectors might be a good option for a certain collectible or a protocol that does tokenized Pokemon cards, for instance. But no, they wouldn't necessarily be the best fit for the Delta Neutral.
Yeah.
Now I have another question, and like I'm sorry, like in advance, because I understand that some of my questions might be like very random, but like these are just something that are very curious to me. But like, have there been cases where like a user or a supporter is like valuable in terms of adding liquidity and attention to like the system, but it's like toxic and like politically radioactive? Like, let's just say you have Kanye West using Legion. He provides liquidity, but like he's Kanye West, you never know what like how do you handle that? I mean,
it's a really good question. So I don't think we've had Kanye West himself use the platform yet, but I've certainly had people, that founders are like, oh my God, like this guy, he's one of our biggest whales. He provides TVL, but he's kind of annoying, right? So there are ways for, it goes to the value add some component score. There are ways for founders to say, like, this person went above and beyond, right? I highly recommend, other teams work with them and raise from them so their score gets boosted. There are ways for founders to kind of say the opposite, right? And say this person's not worth work, even though they bring these benefits. This person isn't worth working with. So there are ways that this, in the value add subcomponent, what you do to support projects, including dumping the tokens, including supporting the founders, etc., makes its way into the score. And so people are kind of incentivized to behave their best and act for the long-term interests.
Yeah, I mean, whales get it easy, man. I mean, they get away with everything. So
they sure do. Yeah.
To wrap it up, my question is, what's the current state of the market? Are we finally in a bear market? Because I think this is one of the longest bulls. I've checked the charts, and it's like since, let's say, mid 2023, Bitcoin was going up, right? So I'd say that's when the recovery was going on, and then the bull phase started or whatever. So are we actually in a bear market? Is the bull over, or are we gonna see an alt season? I mean, I've been waiting for an alt season since 2022.
No, I don't know. I think I'm in a middle ground camp or a third kind of camp, where I do think the cycle is going to be different. I think, but it'll be concentrated. It'll be power law, curve. So you'll have Bitcoin will survive, right? There will be a bit of a correction, as there always is, but I do think with all this institutional buying pressure, with the ETFs, etc., the cycle is fundamentally different. Now, of course, DATs might blow up, or they might get, become forced sellers and add temporary volatility. But I do think overall, the kind of 4-year cycle of a couple of years of bull and a couple of years of bear will have changed to more of a, more temporary volatility, arguably, more risk of maybe a systemic crash, ironically, but also a more permanent kind of bid that's there for Bitcoin. Now, beyond Bitcoin, though, it gets really interesting, because I don't think there's, beyond just a handful of tokens that have a lot of mind share, have a lot of revenue and buybacks, there's not too much buying pressure for these things, right? And so that's why at Legion, we're super focused on finding the best projects, the projects that are generating revenue, right, that have paths to strong value accrual for the token. And so I think you'll increasingly see that, where there's not going to be like what there used to be in other cycles of an altcoin season, where literally everything is going up, right? Going up 2-4x. I think those days are largely behind us. There will be an altcoin season, but it will be concentrated in a subset of the market that is already kind of outperforming, where there's revenue, there's growth, there's mind share, and that's what the market cycles will look like going ahead. So that's my 2 cents, and I think we're in a temporary correction. It could be a little bit of a sustained one, but I don't think it will be like a 2-year, standard bear market type of situation.
Yeah, I mean, back in 2021, I thought I was the best value investor in the world, because everything I was buying was doing a 10x, man. It was crazy. Yeah. But then came 2022, and then 2024, and I kept buying things, and literally just like out of 20 buys, 2 of them went up. Yeah, the rest just kept bleeding. Yeah,
tough.
Matty, thank you very much for joining us today. It was a super valuable episode. I mean, super valuable insights, and we look forward to meeting you at Breakpoint in Abu Dhabi and potentially recording an episode there if you're up to it.
Yeah, that'd be awesome. Let's do it. Look forward to meeting you there.
Yeah,
thank you guys for having me.
Yeah, thank you, Matty.
Cheers.
We should become whales. Like,
how easy it?
We shouldn't become whales, but like become whales.
In what sense, bro?
Never mind. Thank you for joining this episode, and make sure to follow us on all of our socials, and see you in the next episode.